Hi, this is Jack Petrick again. This video is going to be specifically related to the 36-unit investing opportunity in the city of Brook Park, Ohio. This is a 36-unit property that consists of 1 and 2 bedroom units. Overall, the property has been very well maintained, but the rents are low on the property due to just the property being a bit dated. One of the great advantages that I feel we do have with this property is location. It's on 130th, right by the intersection of Snow Road, so it's in a great area with great access and location to a lot of amenities, and also getting on the highway. Another advantage I really like about this property is the size of the units. These are very large, very spacious units. The property does have enough parking for the residents, and we also do have the option of adding some additional income through making some efficiencies with storage. That we can charge some additional fees on the property. But the majority of our value add in this property is going to be from remodeling the kitchen, bathroom units, and also going through and looking to also decrease expenses at the same time. So right now our purchase price, we're just a little bit shy of $1.5 million on the property, and I have an after repair value of $2.4 million based upon the efficiencies that we're going to bring to the table. We're looking to invest $330,000 into this property, which is going to allow us to remodel all 36 units, the common area, and provide exterior remodeling. And then we're looking to refinance the property in about 24 months or less and cash all investors out. Right now, this is just a very quick snapshot of the current financials. We have a total net income right now of $257,000. We have total expenses of $141,000, which right now is giving us a net operating income, which is slightly cut off. Let me take a look here. It looks like, yeah, $116,000. So for investors, we have a couple different options. Investors that are going to be investing under $100,000 and investors investing over $100,000. And I'm going to go into a spreadsheet just to provide just some additional details as far as how the returns look like for those that have participation and having some ownership or equity. So at a 10% fixed return, if we're investing for 12 to 24 months, $50,000 will pay around $416 a month. $100,000 will pay $833. $150,000 will pay $1250, and $200,000 will be about $1,600 and change. Anybody that's going to invest $100,000 or more into the deal will get a piece of equity. So in this property, we have a total of a $400,000 capital raise. And of that $400,000, we could break that equity down into smaller chunks. So, for example, for each $100,000, so again, for $400,000, we could break that up into, for example, if one individual wanted to cover the entire 400, they would own 10% of the building. If we had 4 investors putting each $100,000 in each would get 2.5% equity. We might have 2 investors each putting in $100,000 each, and we might have a number of other investors putting in smaller $25,000 increments. So we can mix it up however it needs to. But the point of what I'm trying to say is, once we have a $100,000 commitment, there's going to be 2.5% ownership that's me granted to that individual. So during the time while the money is invested, again, just use an example of $100,000, there would be $833 a month of interest that would be generating. After 2 years, once we have fully remodeled the property, raised rents, decreased expenses, we're then going to refinance the property at the larger loan amount. That is going to allow us at that point to pay all investors back, so all capital has been completely returned. For those that have equity in that property, they would still receive monies from that point moving forward because they have a piece of ownership in the deal. So that capital would come from cash flow of the property. Again, I have a spreadsheet that I'm going to go into those numbers, but I just want to get the overall understanding at this point, but we'll dive deeper into that. So they would have monthly cash flow. Anytime we do a loan refinance where there would be money coming back from future refinances, they would also get 2.5% of that. And if we were just to take a different option and pay the property off, actually not we, the tenants would pay the property off over 20 years, and the property is paid off, and we were to sell it at that point, there would be 2.5% of the proceeds they would receive with a $100,000 investment. So we're just providing a lot more wealth building opportunities, and just providing an opportunity for people to stop having to ride the stock market roller coaster. The housing market and the stock market has done really well for the last 10 years. But anytime, if we look historically, when whatever ends up coming up ultimately ends up coming down. And we're going to be seeing that coming up sometime in the future. We're looking for a close date of around the 1st of February. We might be closing slightly after that, just depending on some delays around Christmas. But if anybody is looking and wants to invest with a self-directed IRA, it's about a 5-week process from application to get that set up. So it would be critical for us to be able to talk and get that open up right away. And if anybody here is in Northeast Ohio, there are two options. Two of the larger options. One is called Equity Trust, and they're a large, very, very large operation. There's a smaller operation out of Westlake called iPlan Group. I personally have a preference with iPlan Group. I feel like it's a smaller company. It's easier to get a hold of individuals and be able to get deals closed on, because the last thing we want is to have a lot of frustration with taking care of paperwork. But a self-directed IRA, it costs about $500 to set it up, and what it allows us to do is be able to take retirement funds, transfer it, like I said, for no penalties to a self-directed IRA, and with the self-directed IRA, we can then invest in these deals. It also allows a lot of other investing opportunities, and most people aren't aware of this option. You can invest in commodities, you can invest in gold. I mean, there's a lot of options outside of the traditional stocks, bonds, and mutual funds. So just taking a look here, we discussed this earlier, at a 10% fixed rate. I wanted to quantify and actually put, what does that actually look like at a $50,000, $100,000, $150,000 investment? What is the interest that is generated on that? So here's my information, Jack Petrick, my email address, petrickbuilders@yahoo.com. I definitely should have included my phone number in here, but I didn't. So that's going to be 440-552-8483. Again, it's 440-552-8483. And I'm going to pull up a spreadsheet here, which is going to go into some additional detail as far as if anybody is interested and in a position where they have equity. I want to be able to provide more information and actually just provide some additional dollar amounts of how this wealth building opportunity really provides a substantial opportunity. So again, just as far as the summary here, again, when the funds are invested for that 2-year period, there's a 10% return that is coming in that month on those monies. Once we have completed and made our financial improvements, we are then doing a refinance where we are cashing and paying everybody off. So those that have an equity ownership position will maintain cash flow. They will also receive refinance proceeds at the point of doing a cash out refinance. Again, and we could be doing this typically every 5 years on a commercial loan. We have to either reapply for the loan, or we have to be able to do some adjustment every 5 years. So after 5 years of the tenants paying the mortgage down and the property increasing in value, it creates equity that we have the option that we could do an additional future loan refinances where we can pull some capital out, or we could leave the capital in the deal and just continue to allow the property to be paid off. Either options, it's either option. There would be equity and ownership. So again, equity being, there's a spread right now between what the property is worth and what our loan is. And then each month our tenants are paying the property mortgage off each and every month. So after about 10 years of paying on this, the building is going to be, the loan amount will be decreased by half, creating that equity. And the other option here is the ability then to, once we have that capital refinance initially at this point after 24 months, we can then take the capital, put into another deal, and continue to grow that. So I just want to provide initially just some, again, just looking here at a 10% interest. We already looked at what it's going to provide here on a monthly basis. So a $100,000 investment at 10% return on a monthly basis will pay about $833 a month. That comes out to about $10,000 a year. It drives me crazy. I'm short by 4 cents. It would be so much easier just to say $10,000, but we're short 10,000 by 4 cents. If we have the capital invested for 18 months, it will generate about 15,000. And here we are short by 8 cents. So if the capital is invested for a total of 2 years, that is going to grow to an investment of about $20,000. So now we want to take a look at the cash flow that's going to be generated on a yearly basis from having 2.5% equity. So upon the refinance loan, our new loan amount would be about 1.8 million. Our new income would be $330,000. Expenses would be $137,000. Net operating income would be $192,000 and change. Our debt service annually would be $132,000, which would give us a cash flow of $60,000 a year on this deal. So if somebody owned 10%, which would be the entire $400,000 investment, they would receive about $5,000 a year of cash flow. But the beauty is this cash flow is coming after you have been paid back. So you have no money in the deal, but you still receive this ongoing like annuity check. So if we were to break that $400,000 down into $100,000 investments, hypothetically, again, and again, anybody's welcome to invest at lower amounts. I'm just discussing the benefits of having equity. So if we had $100,000 investment, you would own 2.5% of the deal, and this would generate $1,507 on a yearly basis. So what does 20 years of cash flow look like? So right here we talked about $100,000 investment, owns 2.5% of the investment, generates $1,507 a month. But each year we're going to be increasing the rents about 2% through our lease renewals. So each year as we go on, the cash flows can increase because the income of the property is increasing. So just for example, just running this 20 years out, it would generate a total of $36,000 in change by having a 2.5% equity ownership with a $100,000 initial investment. So at the point of so this is a scenario if 5 years or 10 years down the road we were to do another cash out refinance, which we may or may not do. $100,000 investment, 2.5% equity. If there was $500,000 of equity in that property at that point down the road, it would generate a tax-free check of $12,500. If there was $1 million, a 2.5% ownership would generate $25,000. Anytime we receive capital from a cash out refinance, because we're taking those from a loan proceed, there is no tax that is doing that. The same thing if anybody were to take out a home equity line on their primary house, there's no taxation from that. This here is just an example at 20 years. If the property were to be paid off and then sold at that point, this property would probably be worth somewhere in the vicinity of $5 million because we're in a desirable area. The property values are slowly increasing each year. The loan would be completely paid off. And so at a 2.5% equity ownership, if we were to sell the property at $5 million, would receive a check of $125,000. Seems like, and it's a great return. I don't know when the property will be sold. It might be 5 years, it might be 20 years, it might be 50 years. I'm not going to predict when it is going to be sold, but all I want to do is be able to provide just a dollar amount to be able to have an understanding of what an ownership would be able to drive some additional opportunities in this type of investment. So again, if I want to take a look at a summary. Like, what is the total investment of a $100,000 big investment with a 2.5% ownership? So if the capital were invested for 18 months, there would be about $15,000 that would be generated. At this point, we've raised the value of the building. We are doing a refinance of the property, and at this point, all capital has been returned. We had looked at a 20-year holding pattern. We would have about $36,000 in cash flow that would be generated with no money in the deal. If we were to refinance at some point at year 5, year 10, there would be anywhere between $25,000 that would be generated. But in this scenario right here, I'm just going to say there's nothing, because I'm going to say we're not going to do that, and we're just going to pay the property off, which we could go either direction. If the property were to be sold at year 20 when it's paid off, there would be $125,000 that would be generated. So the estimated total proceeds would be $176,000. And what's really cool is $161,000 of that would be generated with no money in the deal. Okay, so as far as an investing strategy, what I wanted to provide was an option, an idea of what this type of wealth growth could look like. If you were to invest into a deal for 2 years, take equity, take ownership, we refinance, we then put that money into another deal, and then to another deal, and then into another deal over a 10-year period. So if somebody were to start out here, invest $100,000, they'd have 2.5% ownership, and in an 18-month period, about $15,000 would be generated interest. About 2 years goes by, we refinance, we cash everybody out. All money has been paid back. Over a 20-year period, they would receive about $36,000 in cash flow. Sales proceeds, again, if it were to be sold at $5 million, 20 years down the road would be $125,000, and total returns $176,000. So all money has been returned at this point, 2 years in, and we would take this capital and we would put it into another deal. So now we would be investing $115,000. And the reason for that is we have our initial $100,000 that we initially put in. We generated $15,000 in interest. So now we're investing with a larger dollar amount. That also has increased our equity. So we're now at 8.75% equity. So we now have a slightly larger equity position. That larger investment is going to generate about $17,000. And again, 2 years goes by, we refinance, we return the capital to put that into another deal. Looking forward on that deal, 20 years of cash flow would be about $42,000 because we have a higher percentage of ownership. Sales proceeds is estimated at $143,000 and total returns at $203,000. We now put the money into a third deal. So now we're investing $132,000 because we have our initial $100,000 plus we have the $14,000 of interest plus the $17,000 that we generated. So now we built that up to $132,000. So the equity that is owned is now at 3.25%. The interest generated in an 18-month period is $19,000 and change. 2 years goes by, we refinance and take all the capital, return all capital. But again, moving forward because of ownership, 20 years of cash flow is $47,000, $162,000 and change on the sales proceeds. So that deal itself will make $229,000 over the course of 20 years, and if or when the property is sold. Now we're reinvesting into our fourth deal. We have $152,000, which again is our initial $100,000 plus the $14,000, $17,000, and $19,000 that we've made, which takes us now at $152,000 into our fourth deal. Equity ownership is at 3.725. $22,000 is generated in 18 months of interest. 2 years goes by, we take all of our capital, return it to investors. 20 years of cash flow is about $55,000, $187,000 in sales proceeds. So the total investment on that deal over 20 years could be somewhere in the vicinity of $265,000. Again, assuming the property is sold at some point down the road. Last scenario here is now we've put in $175,000 in. We have 4.375% equity ownership, $26,000 generated, and I'll just spare you the details, but there they are as far as the 20 years of cash flow, sales proceeds, and total returns. So in a 10-year period, by investing with that initial $100,000 and just allowing that to grow on itself, over the course of 10 years, there is $100,000 that has been generated in interest over the course of all these deals here, over the course of 10 years. But again, your capital has been returned. So on a $100,000 initial investment, it's generated $101,000 over a 10-year period. All money has been returned to your investors. 20 years of cash flow would be about $245,000, again, over a 10-year period across 5 properties. That would add up to around that number. The biggest chunk of cash that's going to come is at the point of sale. And again, I'm not saying or predicting or saying when that's going to happen, but if and when those properties are sold, if they're paid off at that point, this is potentially the total investment that would be paid back to investors. It's a substantial number, but this is not a get-rich-quick scheme. This is 20 years of managing these properties, and the properties being paid off, and giving us a total combined investment of doing 5 deals over a 20-year period of somewhere about around $1.1 million. And I think that actually probably at this point that concludes this video. Again, if you guys have any questions on this, please reach out to me. We have to have this deal funded by the first week of February, and also we do have a lot of additional deals that are coming up behind this. So if you have any questions or anything wasn't clear on this, if you could please reach out to me. Let me just type my phone number here: 440-552-8483. Again, it's 440-552-8483. This is my cell phone, and please feel free to reach out to me if I could answer any questions about this and if there's anything that wasn't clear on it. So if anybody's looking to invest with their any retirement funds, firefighters and police officers also have the option to be able to invest with their deferred comp or their 457 account. They're able to transfer that into a self-directed IRA. But a self-directed IRA is really a game changer, and having equity ownership into a deal really provides a pretty incredible returns that are not available to just a lot of other individuals. So again, if you have any questions, please reach out to me. Thank you.